Islamic finance has emerged as an effective tool for financing development worldwide, including non-Muslim countries. Major financial markets are discovering evidence that Islamic finance has already been mainstreamed within the global financial system. Let us recap some key developments and stories for March 2026. Barely weeks after the Rural Electrification Agency and Lotus Bank signed a landmark 100 billion naira memorandum of understanding, the partnership has begun to yield results as Ventura Logistics Services has secured 7.4 billion naira in financing to deploy renewable energy infrastructure across 8 key sites in Ebonyi State. The funding, backed by the Distributed Access to Renewable Energy Scale-up Program's performance-based grant framework, marks the first major drawdown from the Lotus Bank facility. In a statement, the REA said that the investment is expected to deliver approximately 7 megawatts of renewable power, a move projected to impact over 30,000 households and businesses. The deployment will cover communities in Ogbosi, Mubiokba, and Ohauzara within the Ohauzara local government area, extending to Obunwana in the Edda local government area, it was learned. It will also reach Unwana and Afikpo in Afikpo North, as well as Iboko in Izi local government area. Reacting to the development, the managing director of the REA, Abba Aliyu, said the milestone shows that the agency is actively pursuing partnerships that deliver tangible results to Nigerians. According to Mr. Aliyu, the project demonstrates how strategic alignment can produce immediate benefits for the public. Jai's Bank has assured stakeholders of sustaining a banking model with strong ethical values. This will continue to guide its financial services and drive long-term impact for individuals, businesses, and communities. The managing director of Jai's Bank, Dr. Haruna Musa, disclosed this at the Ramadan Lecture 2.0 organized by the Chartered Institute of Bankers of Nigeria. Speaking on the theme Ethical Leadership in Finance, Insights from Islamic Values and Tenets of Ramadan, the managing director, who was represented by Adiremi Oladipo, divisional head treasurer, assured that the bank will continue to anchor its activities on its principles of Sharia-compliance. The event brought together distinguished leaders and professionals across the banking and finance industry to reflect on the importance of integrity, accountability, and value-driven leadership. The month of March concluded the 2026 holy month of Ramadan. Tennis Capital Investment Banking, the Kazakh Abu Dhabi Investment Bank, published an urgent debt markets report concluding that Islamic bonds or sukuk are consolidating as a safe haven asset for regional investors amid the repricing of geopolitical risk triggered by the military escalation in Iran, with the current correction opening a selective entry window in GCC debt with potential returns of 4 to 7% over the next 6 to 12 months. The escalation around Iran at the start of 2026 has led to a repricing of geopolitical risk across regional debt. Sovereign 10-year yields have risen 3 to 30 basis points year to date, with GCC average at 4.2 to 4.7% and spreads to US Treasuries widening 4 to 30 BPS. Regional credit default swaps have increased 8 to 25%, though Saudi Arabia's 5-year CDS at approximately 7 to 1 BPS remains well below the emerging markets average of 150 BPS. The market prices is 20 to 30% probability of a prolonged conflict with oil supply disruptions through the Strait of Hormuz. Under its base case scenario, assigned a 60 to 70% probability, the report envisions a controlled escalation without regime change or default. The current correction opens a selective entry window of potential total returns of 4 to 7% over 6 to 12 months in long-term duration GCC sukuk and Israeli bonds. This outlook is underpinned by strong fundamentals. 4% of regional sovereign issuances carry investment-grade ratings. Brent crude at $70 to $73 sits above fiscal break-even levels of $57 to $82, and the non-oil share of GCC GDP at 70 to 75% reduces external shock sensitivity. Global sukuk issuance reached a record of $150 to $160 billion in 2025, up to 20 to 25% year over year, with sustainable sukuk growing 44% to $11.4 billion. Issuance for 2026 is projected at $170 to $180 billion. Investment-grade instruments account for 82 to 85% of the sukuk market, and year-to-date total returns of 1 to 2% have outperformed the broader emerging market, that's universe. Spread to conventional bonds narrowed to 2 to 5 bps, reflecting demand from Islamic financial institutions and crossover investors. The report attributes sukuk resilience to asset-backed structures, a stable institutional investor base comprising 40 to 50% of placements, and their growing role as high-quality collateral in GCC banking systems, where repo operations rose 15% year over year. S&P Global Ratings today confirmed its A-plus issuer credit and ensure financial strength rating on a Nova Ritakaful BSC. The outlook is stable. The tensions in the Middle East region have escalated significantly in recent weeks, and it is too early to assess the potential impact of the conflict on HRT's business. However, we believe that war-related exposures are either highly reinsured or subject to war exclusions and should therefore be manageable. Given the increasing geopolitical risk in the region and a more challenging operating environment, we have revised HRT's risk exposure score to moderately high from moderately low. This aligns the score with that of other reinsurers in the region. We forecast that HRT will maintain capital adequacy at the 99.9% confidence level in 2026 to 2027, supported by profitable earnings, of which a share will be retained. At year-end 2025, HRT reported strong capital buffers above the 99.9% confidence level as per our internal risk-based capital model. Islamic Finance Weekly will go on a break, and when we return, we'll bring you further updates. Welcome back. Here is the Fact Box segment. Nigeria's non-interest banks, Jaiz, Taj, Lotus, Alternative, and Summit, have announced that they have met their capital requirements set by the Central Bank of Nigeria ahead of the March 31st deadline. Non-interest banks are leveraging strategic capital injection to support economic growth by aligning with national policies aimed at increasing financial inclusion and economic stability. Now to our next story. Global sukuk and debt capital markets in the Gulf Cooperation Council are facing varied liquidity headwinds as the ongoing conflict in Iran continues to influence investor sentiment, according to Fitch Ratings. The agency said market conditions across GCC debt capital markets have weakened since the conflict began, with the impact varying by credit ratings, sovereign risk, and sector type. According to Fitch, the short-term impact hinges on the war's scope and duration, while long-term effects will depend on the end of the conflict and the speed of investor confidence recovery. Fitch uses Bloomberg's liquidity assessment scores, which range from 1 to 100, with 100 indicating the highest level. In its latest report, Fitch stated LQA scores have declined in most GCC debt capital markets since the war began, as well as for many sukuk issuers in Turkey, Egypt, and Indonesia. It added, in contrast, many rated Malaysian, Omani, and supranational sukuk have shown resilience in their LQA scores. The decline in LQA scores for investment-grade sukuk has been less severe than for speculative-grade sukuk on average, highlighting a widening divergence in liquidity conditions. On the Malaysian floor, Malaysia's halal sector faces rising operational risks from the Middle East conflict, although the industry remains resilient due to the diversified export markets, says economist Barjoy Burdai. He said the conflict is affecting the global halal industry primarily through disruptions to logistics, higher energy costs, and shifting investor sentiment. The conflict is more of a cost and logistics shock rather than a demand shock, said Berjoy, provost at Malaysia University of Science and Technology. Certain sectors are more exposed than others, he said. Halal food and beverage producers, especially those dealing with temperature-controlled or bulky goods, face higher freight costs, longer delivery times, and increased inventory expenses. Palm oil-based products are vulnerable due to the Middle East role as a major buyer and the commodity's sensitivity to crude oil price movement. And that will be all on Islamic Finance Weekly today. Don't forget to keep updated with us next week on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching. And as always, I am Rahma Say Mohammed.